In this video, we will be discussing how fundamentals drive price action. This video is sponsored by Prosperity Algo and our free Golden Time Bomb Expert Advisor. Do you want to make 100+% annual returns through automating the London breakout and the opening range breakout? Then click the link in the description. So, quite often when people are trading, be it using manual trading or using algo trading, they run across an issue that a strategy which may have been working super well for a few months has stopped working, or it is not performing how it did a few months ago. And they often wonder why, like what all of a sudden happened that my breakout strategy, which was working phenomenally for 6 months, is now just seemingly losing money every day. And really the answer to that question is typically market regimes. And I find that if you understand why price action changed and essentially why the market is behaving differently than a few months ago, it can help you make informed decisions as to how you want to actually adjust or allocate different amounts of money to your portfolio, to different bots, or to different strategies. It can also show you when perhaps it might be a better time to trade a particular strategy, even in a discretionary method, versus it might be a better time to trade something else. So in this short video, I wanted to go over some examples of how fundamentals drive price action. Because on an intraday basis, yes, occasionally if there's news events or large moves can be fundamentally driven, but a lot of just small price action is driven by the auction process. So the interaction between buyers and sellers, like where orders are based, and liquidity and supply and demand, and all the classic kind of technical drivers which are behind technical analysis. However, as soon as you go over longer time periods, at least in my opinion, the vast majority of movement is caused by fundamentals. Like the price of gold moves because on a macro scale, people are using gold as a hedge or as a reserve currency or as a way to just kind of protect against inflation or risk environments in the general markets. The same thing with equities. Like if the actual stock values of the underlying equities behind the US 30 or behind the S&P go up, that's what's going to cause large movements of indices over the long term. It's not trend lines which cause that, right? So if you understand on more of a macro picture why price is behaving how it's behaving, it can really help. And in this video too, we're going to use the US election and gold prices to kind of illustrate and provide some examples. So starting off here, if you guys were trading gold in spring of 2024, just less than a year ago, you probably saw this immense bullish rally. And a lot of strategies which capitalized on this did exceptionally well. So that's why we were seeing the Gold Reaper, Gold Trade Pro, all of those bots were at the top of the MQL marketplace during this period because they trade gold breakout systems. So obviously if gold is just trending upwards in a very, very bullish, clean trend, all breakout based systems will do super well. Whereas at this time, had you been trying to trade maybe a grid martingale on gold, maybe the golden pickaxe, for instance, by Valerie Trading, you may have blown your account many times because if you were entering a short grid and the market just kept trending up and up and up and up, you probably would have lost a lot of money. So here, had you understood that, okay, we're in the start of a very aggressive rate cutting cycle. So this was around the world when many different central banks started cutting rates because we were coming out of the C-19 pandemic finally. And we had that massive inflation there for a few years, and they were looking to start to cut rates as inflation metrics were getting better. So we were seeing that CPI was starting to get more in line with expectations, and systematic inflation was starting to go down. And then this is when we saw kind of the start of this spring period, is when various central banks around the world started cutting rates. And Switzerland was one of the first to start cutting of the major Western nations, and then everybody kind of started following suit. And as we know, gold is a non-yielding asset. And that just means that if you hold gold in an account, you don't get paid interest, which it's a rock, right? So that makes sense. Whereas if you were to hold almost any currency, the bank in which you hold the currency in will typically pay you interest on your deposits, or if you hold a term deposit. So that means that if interest rates are high, investors obviously prefer to hold something which pays them interest as opposed to holding a rock which does not. So this rate cutting cycle was obviously very bullish for gold because investors can then take money out of various currencies and then allocate it to gold. Moreover, as gold is kind of its XAU USD, if the US dollar is particularly strong, which would be strong because of high interest rates, then gold would be it would be pushing downward, right? It would be bearish for gold. So essentially, just to kind of wrap up here, if you understood like, okay, we're in a very bullish period here for gold, obviously breakout systems will do well, that could have kind of informed your decision-making process, and you would have known that, okay, just because these bots did insanely well these past few months, it doesn't mean they're going to keep doing well once we enter more of a consolidating period. So kind of understanding the fundamentals behind it would have given you a lot of clarity. And here we can see now kind of like another big fundamental driver was entering the US election period. So around July of 2024, we had Biden dropping out of the race and Harris replacing him. And all of a sudden, like, this affected equity markets even more, but there was now market uncertainty. Because when Biden was running, like, people had assumed that it would have been fairly in the bag for Trump, it would have been a fairly easy election. And because markets generally favored a Trump victory, markets were very bullish. At the same time, markets just like certainty. So if they know and there's a high probability that Trump is going to win, price action would be rather clean. However, when Harris started kind of entering the race and polls started going actually in her favor, all of a sudden there was quite a bit of market uncertainty. And that's when we had this very nasty, choppy range in gold and equities for quite a few months because there was so much indecision and people didn't know, like, how are the tax proposals going to affect markets? Like the unrealized capital gains tax, like, what is that going to do? How will this actually impact everybody? So it led to a very choppy period. And people who had maybe bought gold bots in the spring of 2024 were now panicking, like, why is my bot not working? Well, fundamentally, if they were doing super well in a very specific type of price action, that doesn't mean they're going to keep doing well. So understanding that catalyst was also a pretty good example. And here now we can see another great example of a huge sell-off that occurred post-election. And this comes down to gold being a risk-on asset. People buy gold to hedge against risk. And there was a lot of, or perceived risk around the election outcome. They didn't know what's going to happen in terms of transition of power. Is there going to be any sort of messiness in the political process? And because of that, gold prices were going high as people simply perceived risk to be on the table. And this typically happens with almost any presidential election in the US. Like, people do buy gold just because there's always a bit of uncertainty regarding what's going to happen. And then here we can see, like, just when the election was over, we had a massive sell-off in gold. And this is simply because everything went smoothly, so people got out of gold and reallocated money elsewhere. So this was just some rebalancing of portfolios. And then this would have shown you that in this period, a lot of bearish strategies did really well. So I did very well with my missile system during this period, as gold was just selling lower and lower and lower and lower. So effectively taking shorts on these massive impulses down was a very profitable approach. However, had you been trading a long-only bot here, you probably wouldn't have made any money. So understanding kind of what caused this period of price action is also pretty important. And here now we're in early 2025 as I'm making this video. We can see that markets are generally pretty bullish post-inauguration actually. So now we are entering a period where the new administration is taking power and expected to be extremely pro-business with deregulations and, generally speaking, doing policies which are favorable for business and for financial markets more generally. Moreover, we're also entering a period with further rate cuts. So there might be some more rate cuts, but people are still waiting to see if the new policies are also inflationary, to see how the Fed will react. So there's a bit of uncertainty here. But the main takeaway is that it's not quite clear yet what the markets are going to do this year. If it was clear, I would be an exceptionally wealthy man. So unfortunately, I can't fully project what's going to happen. But there's a lot of different themes which people are discussing. Like, will the new policies being put in place by the Trump administration be deflationary or inflationary? How will tariffs affect global markets? And effectively, you just need to be aware of what's going on to kind of understand what strategies might perform best in this cycle. So one thing to take away, though, is that if you're expecting the exact same price action as 2024, I would be a little bit skeptical of that. simply because 2024 we had a lot of room to cut rates. So there was this massive rate cutting cycle which caused an immense bullish push for gold. So obviously any sort of bullish breakout based system would have done super well. We simply have less room to cut in 2025. So the amount of basis points cuts which we saw, I think would be a bit optimistic to wait for something like that. There's just not as much, like you can only go so low. So being able to have profitable trading strategies in 2025, you really need to understand robust systems which don't rely on a very particular type of price action. And now I wanted to share just some good news sources which I like to use. So the most digestible would be Trader Nick here on YouTube. He makes some good videos just kind of covering current news events for the week. And it's just neat to hear kind of the perspective of another more like retail or independent trader. It's cool to hear his perspective. And then I also like to read economic news releases from some of the large banks just to get an idea of what their economics teams are working on, as well as follow some of the larger news sources like Bloomberg, just to kind of see what people and professional traders are looking at in the markets. So guys, I hope you found this useful, and it's a bit of a different video today, but have a great day and leave me a comment if you want me to cover something else.